Hey everybody, this is Danelle, and today we're going to talk about some of the major headlines in the cryptocurrency space, and then we're also going to talk about why it's important to consider getting a cold wallet or some of the other options that you have to reduce your risk with regards to what's happening with a lot of these cryptocurrency exchanges currently in this bear market. So, as you can see here, this is about Voyager Digital, which is another cryptocurrency exchange. And they recently announced that they'll be cutting their daily withdrawal limit to $10,000 amid the 3AC exposure. 3AC is stands for Three Arrows Capital. It was a major cryptocurrency investment fund, and due to the extreme volatility of the cryptocurrency market and Bitcoin dipping below 25,000, 20,000, it has now caused possibly many liquidations in relation to the amount of Bitcoin and other cryptocurrency that Three Arrows Capital borrowed and leveraged in making a lot of its investments. And Voyager Digital was one of its apparent creditors. So, given that they're tied to Three Arrows Capital, they now do not have access to the funds that they most likely would have had if it wasn't for the Three Arrows Capital situation. So now they are limiting the amount of withdrawals that their customers can do daily. So it went from 25,000 down to 10,000. So that is an extreme difference in how much one can withdraw. And they also recently received funding from FTX. FTX is the second largest cryptocurrency exchange as of late, particularly amidst all of the problems that a lot of other cryptocurrency exchanges are having. Binance is still at the very top. If we look at the 24-hour chart, Binance, is over 10 billion in volume, and FTX is way behind at over 1.8 billion, but they have a very strong balance sheet, and so they actually have been able to help out a couple of crypto exchanges in offering lines of credit and a term sheet to allow some other cryptocurrency exchanges that are in a little bit of trouble, or just for them to make sure that they have enough liquidity to take care of customer business. They went and were able to get some funding from FTX. As you can see, Coinbase is still towards the top here, and Binance US and Gemini, another popular US cryptocurrency exchange, is in the top 10. So back to the situation with Voyager Digital, they will be reducing the amount of withdrawals, and this is on the heels of the news that Celsius Network, which was a company that we mentioned in our How to Earn Free Cryptocurrency video, they suspended withdrawals completely, given that they are on the verge of bankruptcy. So they sent a memo to the community on June 12th, which was approximately 12 days ago. So it's still been over a week that customers have not been able to withdraw any funds or trade any funds or swap any funds on the exchange. As you can see here, it says due to the extreme market conditions, they announced that they will be pausing the withdrawals, swap, and transfers between accounts. So they say it's in the interest of their community, but obviously there's a lot going on in the back end. They're trying to find ways to recover funds and avoid liquidations, basically meaning any funds that they had out on other exchanges or other decentralized applications that they were trying to stake for a higher interest rate. Some of that could be locked, meaning that they have a certain period of time that they cannot retrieve funds. So, if that is the case and the cryptocurrency market continues to go down, then they also have the possibility where they could be liquidated, meaning that they would then be forced to sell the cryptocurrency that they held. And if they sold it, it would be at a much lower rate than when it first went in. Therefore, they would lose money and would not be able to have the liquidity, meaning they would not be able to have the funds for their customers to be able to do the transactions on their exchange. So that's a huge problem. It's a huge concern. There's a possibility that the Celsius community may never see their funds again because they are considered unsecured creditors. The money that they put on the exchange was then being used by Celsius, and it's in the terms of conditions. So there's a possibility that the Celsians, as they call themselves, may not be able to receive these funds if Celsius does indeed go bankrupt. Another cryptocurrency exchange known as Blockfi, where you could put your cryptocurrency on the exchange and be able to receive interest back for holding your cryptocurrency. They also do various things with your funds, and it's nothing new. It's obviously a little bit more risky in the cryptocurrency space, but traditional finance and traditional banks do this all the time. The money that we leave on the in our bank accounts, they also take that money and use it to get a higher return, and they give you a cut of that return. But normally, it's very easy for us to get in and out of our accounts with a traditional bank, even though they do. And one of the reasons why we are very interested in cryptocurrency is that there can be limitations on your withdrawals of your funds in a traditional bank as well. So we're going to go here to Chainalysis. This is a chart showing the BTC inflows to exchanges, and basically it shows the market sentiment in terms of what's happening. If there's more inflow of Bitcoins going to the exchanges, that means that most likely those inflows are being used to sell Bitcoin. Usually, when cryptocurrency is being put on the exchange, it's usually being used to trade, not to be held. Now, in some cases, like Celsius and BlockFi, people are using the exchanges to earn a staking reward or interest back. But a lot of times, when people are putting money on an exchange, they're using it to trade and to sell. So if there's more inflows into the exchanges, that means that there's more likely that they're selling, and that usually correlates with the Bitcoin price, and the price is usually going down. So people look at this as part of their research when they're deciding if and when to buy and sell Bitcoin. So as you can see here, over the past month or so, there was an increase in inflows around June 13th. And I believe that was around the time, that was actually the time that Celsius had announced their suspension of withdrawals from their exchange. You also started hearing rumblings about what was happening with Three Arrows Capital. So you see a lot of people were putting their money on putting their Bitcoin, excuse me, on the exchanges, because that also was showing a deep decline in Bitcoin. So people were rushing to sell their Bitcoin to try to get out, thinking that there's a possibility that Bitcoin could potentially go down even further. And now you can see, since people are being scared to leave their money on exchanges, you're now starting to see that people are removing their Bitcoin off of the exchange. So if they're not going to sell it, and most people who are Bitcoin maximalists are about holding their Bitcoin. So if they take their Bitcoin off of the exchange, that means that they're putting it away in their own personal wallets, and they don't plan on selling it anytime soon. So with all of the news with exchanges having issues with liquidity, more people are now taking their funds off of the exchanges. So that's why you're seeing this dip down over the past week or so. So we want to talk to you a little bit about the difference between a cold wallet, a warm wallet, and then leaving your money on the exchange. So we talked about leaving your money on the exchange, and that there's a risk of suspensions like what Celsius did, or a risk of reducing the amount of withdrawals like Voyager Digital is doing. So there's always a possibility when you have your cryptocurrency on the exchange, they have control of that cryptocurrency. So there's a phrase saying, not your keys, not your coin. So if you don't have the private keys, then you are unable to have full 100% access to it. There's a third party that is controlling that cryptocurrency. So with cold storage, as you can see here on our trusty Investopedia, that cold storage is an offline wallet used for storing Bitcoins or other cryptocurrency. With cold storage, the digital wallet is stored on a platform that is not connected to the internet. Now that is very important because there are warm wallets which are connected to the internet. You also have your keys, your private keys with that wallet, and please refer to our how to create a MetaMask wallet video where we go through step by step how to set up a MetaMask wallet. But in this case, the difference is that the warm wallet is still connected to the internet. So when you're connecting to buy an NFT to a particular link, if you're connecting to a phishing link, then there's a possibility that you could be hacked. So it's very important that you understand the difference between the cold and the warm wallet. So the cold storage methods are useful for individual investors, but cryptocurrency exchanges and companies involved in the crypto space also make use of this type of wallet. It is more broad to other modes of operation for storing inactive data, but the most important thing is that understanding cold storage is a way of holding cryptocurrency tokens offline. And by using cold storage, cryptocurrency investors aim to prevent hackers from being able to access their holdings via traditional means. So we're going to go through a couple of the more popular hardware wallets that you can use. Ledger is one that I use. I really have loved the simplicity of using it. They have a new version that has come out. And even if you lose the actual device, as long as you have those private keys, which is the password, which you want to put in a secure place, then you will always have access to that cryptocurrency. So here we are at the ledger.com website, and you'll be able to see and get more information about being able to purchase one of these wallets and find out more information about how you can connect it, your cryptocurrency, and be able to get your cryptocurrency onto that particular wallet. Another one that's also pretty popular is the Trezor wallet. This is trezor.io. You can also find out some more information about using this hardware wallet as well. Once again, this is a cold wallet, so it is not connected to the internet. As I mentioned, we have a MetaMask video. This is metamask.io. This is used when you are usually trying to buy NFTs or switch in and out of cryptocurrencies or be able to have direct and quick access to cryptocurrency exchanges. Sometimes it's used as a middleman, as if you will, between a cold storage wallet and a cryptocurrency exchange. If you want to have quick access, warm wallets can be very useful. Another warm wallet, not to be confused with the Coinbase exchange, is the Coinbase wallet. The Coinbase wallet is also very similar to the MetaMask wallet, very simple and easy to set up and be able to trade, send, and receive cryptocurrency as well as hold NFTs. We'll also go over the Phantom wallet, which is compatible with the Solana blockchain. So all Solana NFTs and Solana cryptocurrency can be stored on this wallet. And also Solana, as well as many other cryptocurrencies, can be held on the cold wallet. So if you go to that Ledger website, for example, you can see all the different crypto assets that it is compatible, that is supported on the wallet, and you can search for any particular cryptocurrency that you want, and they hold most of the popular cryptocurrencies on the market today. So that's just a brief explainer on cold wallets and the importance of having your keys because it gives you sovereignty over your value of your cryptocurrency. This is a revolution. It's giving you the opportunity to have financial freedom, true financial freedom, but you have to be very secure. And these are the ways that you can prevent being held up by a third party like a cryptocurrency exchange or a traditional financial bank, but you have to be very wary of how you go about securing those assets. Hopefully, this is helpful. We look forward to bringing you more informational videos as we go through this very rocky time. No need to be scared. It's just a time that we can learn as much as possible. So please join the chain. We'd love for you to link up with us. So if you like the content, please do all the things like subscribe, and we look forward to connecting with you soon. In the meantime, take care. Bye bye.